Thank you for the invitation. Thank you also to Ubaye. I don't know whether he's on the call.
Hello, John. Hello, sir. I'm really sorry for the last time miscommunication.
Oh God, stop it! No.
I still feel bad about it.
No, I am happy that it worked out. I'm happy that that we finally got it to work. So my plan today is I want to talk for about 10-15 minutes, just give you sort of the highlights and then allow plenty of time for questions. I think that's more interesting than me going on, droning on for 60 minutes and you falling asleep, because I understand that you're giving up your lunch break for me. So thank you very much for this sacrifice. I hope it's going to be worth it. So let me, I've sent my slides to Sanem, so she's going to excuse me, distribute them at the end. Oops, sorry. Right. I was going to start by this. This is a point I'll come to again, and this is, if you remember this famous quote by Donald Rumsfeld about, you know, the things we know. There are the known knowns, things we know. We also know that there are known unknowns. That is to say, we know that there are some things that we do not know, and then finally there are the unknown unknowns. The reason I'm bringing this up is because with a central bank digital currency or a CBDC, there are lots of known knowns. I mean, we know what we have to do. We know what the thing looks, you know, we know what it is. There are a couple of known unknowns that we haven't really agreed on in terms of the design of a central bank digital currency. So I'll talk about the known knowns. I'll talk about the known unknowns, things we still have to think about. And I'm sure there are, as I will argue, I'm sure there are lots of unknown unknowns. So things we don't know yet, or things we know that we don't know. And I'm worried about these unknown unknowns. I mean, I'm also worried about the known unknowns, but there's a lot of things that we don't know are going to happen in terms of a CBDC. I should start by saying that these things are not new. It's not because of Bitcoin, or it's not because of the blockchain that we are thinking about a central bank digital currency. They actually go back to a couple of papers by James Tobin in the 1980s. So he was the first to think about an electronic account with the central bank. And he called these a deposited currency account. So it's not a new thing. It's just that you know, the technology wasn't up to par up until, you know, sort of more recently. In terms of recent developments, CBDCs are obviously in the news a lot. And that's what my next slide is about. Now, this is just, you know, some sort of brief indication. These are speeches by central banks, either governors or board members. And what I would like you to look at is this black line, which for the longest time was below zero, which meant that people had negative feelings about a CBDC. And it's only recently that the black line actually went positive. So it seems that central banks are having more positive feelings towards a central bank digital currency. Now, these are sort of feelings. No country has actually launched a CBDC yet. Now, the two different colors, the sort of brown is a retail CBDC, i.e. something that we can have as consumers, as agents in the economy. And the blue one is a retail, as a wholesale, sorry, other way around. Sorry, the red one is it's a negative stance, and this is both for wholesale and retail CBDC. The positive feeling is more about a wholesale CBDC, i.e. one that exists between banks and the central banks. And people are still unsure about the benefits or the notion of having a retail CBDC that you and I can have and use. Although I do have to say there's been a recent update to the survey a couple of weeks ago. So you may want to take a look at this more recent BIS survey. This was about 6 months ago. Finally, there's a lot of research being done at the moment on CBDCs, and these are all the pink or the colored ones around the world that have actually started to research the idea of a CBDC, either retail, i.e. for individuals, or a wholesale one, i.e. for banks. And 6 months ago, there were about 36 research programs around the world. And there are a couple of trials going on at the moment, or were in the Bahamas, in Cambodia, China, Eastern Caribbean Currency Union in Korea and Sweden. So they're sort of trialing this at the moment. And 3 are pretty well advanced. One is the Chinese one, the Swedish one, and the Canadian one. So they're in the lead in terms of trialing this at the moment and seeing how and if it works. Now, why would we want to issue a CBDC? Opinions differ. So again, the Bank for International Settlements, the central bank of central banks did a survey and why central banks would like to do it. And there's an interesting difference between advanced economies and emerging market economies. So advanced economies, which are the blue pillars, generally do it because they want to promote the safety and robustness of the domestic payment system. Now, for emerging markets, which are the red pillars, they mainly do it for financial stability concerns, and they would like to do it for financial inclusion. So those are sort of, the motivating factors for the possible issuance of a CBDC. Although you can see there are sort of other ones as well. One big question that people tend to forget is whether central banks can actually issue a central bank digital currency, because most central bank acts predate, the sort of electronic money era. Many central bank acts go back to the 1980s or 1990s, when this notion of a digital currency didn't really exist. So only about a quarter of central banks around the world have the authority to issue a central bank digital currency. A third do not have the authority, and the remaining 40% don't know. They just can't tell you whether they can issue a central bank digital currency. There's a lot of uncertainty, and that needs to be addressed, that needs to be filled. So it's not something that central banks can do like this, but you may need to amend the legal act of the central bank to allow it to issue an electronic currency. Okay, this was my sort of whirlwind introduction. Before I get to the key elements and design features, any questions, comments, concerns so far?
I would like to ask something.
Sure, yeah, absolutely.
emerging markets have different reasons for digital currency.
Yeah.
But I would like to ask, do they have the necessary infrastructure or monetary equipments in order to establish this digital currency in their societies, unlike developed countries?
Okay, this is an excellent question, and you are my friend, because this is my big worry as well, which is that to me, and I deal with a lot of emerging markets where I'm sitting at the moment, there's this perception that to me, this is my personal opinion, there's this perception that if you have a digital currency, you can leapfrog immediately to financial inclusion. So you don't have to do the hard things, which is, to have a payment system, which is to have, as you said, the infrastructure that can handle a digital currency. You need to have, and we'll get to that in terms of the design. How would people access the CBDC? How would people use it? Is it probably on the mobile phone, or is there going to be an app? And does the entire country have Wi-Fi access or 3G and 4G access? There is, to me, I think a lot of governments are a bit lazy in the sense that, let's have a digital currency, and then we don't have to worry about these things. In many countries, there may there may not be electricity for 24 hours a day, and then what do you do in these situations? So I think to me, a digital currency or a CBDC comes at the very end of the process. Once you have everything else in place, how do you get financial inclusion? Well, you get banks to provide low-cost accounts for everyone. You create an institution that provides easy access to the financial system. It doesn't have to be a central bank digital currency. So I think there's a bit of a misapprehension. Sorry for going on about this, but this is one of my, I feel very strongly about this, and I'm always quite upset when I hear, I don't want to single out countries, but when I hear Cambodia going, oh, we have a digital currency and now we can have financial inclusion. I go, no, there's lots of other stuff you have to do before that. So my long answer to your question is yes. There's a lot more that has to be done, infrastructure and so on and so forth. So I totally agree with you.
Sir, I have a point on it. Can we say that core literacy rate is the proxy for the success of it? For example, if there is a low literacy in a country, like for example for Pakistan, it's not going to be very smooth process to transform this. And one more point about you saying that setting up the infrastructure, one trend I see in Pakistan is that rather than people going to traditional brick and mortar banks, they are more linked to digital mobile wallets, like telecom companies providing this. So can we skip that part and then directly go to that? Can it happen?
Again, you raise a fantastic point, which is another one of my bugbears, which is this issue about financial literacy. Simply giving you an app on a phone is not going to allow you to, know how a loan works or a mortgage works, or how any of these things work. We're all economists, so the big question we have to ask ourselves: where is the market failure? Why does the government have to step in with a central bank digital currency? Is there another solution that is more cost effective, that is quicker, that has less negative aspects? I think these wallets are great because to me they're a sort of intermediate step in terms of getting people, making people knowledgeable about how to use contactless payments, how to use them for financial transactions. I mean, there's another, going totally digital. There may be parts of the population that cannot follow. You may be, there may be, and how do I put this diplomatically? How do you? I mean, if you're vision impaired, I mean, how do you use the app or whatever? If you are, there might be mental issues, or if you're disabled and you can't use a mobile phone. I mean, I'm making this sort of up as I go along, but I'm straying away from a little bit, but you know me, I'm going off on tangents, and then sometimes I come back and sometimes I don't come back. I don't think we can ever get rid of cash, because some people can only use cash and they may not be able to use a digital currency. I'm thinking about, and I love them dearly, but I'm thinking about having to explain a wallet to my parents. I don't think they will ever use electronic money or electronic banking or digital banking, just because they don't really grasp this notion of doing everything on a laptop or on your mobile phone. So I think financial literacy is key. And again, I think many governments around the world can do a lot more about doing that. Primarily because, if you have an app on your phone, what's the first thing that's going to happen? You'll get all sorts of phishing attempts, phishing emails. So financial literacy, being aware of financial scams and frauds, and okay, I'm exaggerating. What is interest? How does interest work? All of these things, have to be there as a foundation. Then we can use the wallets to get people acquainted with how a sort of a non-cash payment system works. And then at the end, if we really have to, we may want to think about a CBDC. But as I'll outline a bit later on, there are all these known unknowns that raise a lot of interesting and very hard questions. I don't know whether that. Sorry, I don't know whether that answered Uwai's question.
It did, Hosram. I understand like where you're coming from.
Okay. Yeah. Sorry, Senem.
My concern is, we said that those in the features, emerging markets concerned about the financial stability, but the advanced economies actually see as a safe way. But my concern is related with price stability part. For example, when, let me say like that, this digital currency with central bank issues can compete with private issues currencies as well. So in that sense, how can central banks control these, and how can central banks control price stability? I mean, how interest rates can be controlled, or how they see that they compete with these private issues? It can be concern related with,
yeah.
For example, Elon Musk says that I'm going to sell Teslas, those who like to give as a Bitcoin. I mean, I was just concerned with price stability.
Yeah. Okay. Two excellent questions. Let me start with the second one first. So it all depends on how popular the private digital currencies are. So at the moment, they're a very small part of, sort of the overall cash money in circulation. Now that may change, or it may not. the problem arises if these privately issued digital currencies sort of attain a critical mass where they are really in competition with cash or with the legal tender. You know, if it's sort of 50%, the higher the share of privately issued currencies, the less power the central bank will have to control inflation. So we're not at the point yet. I mean, none of these currencies have made a significant inroads into in terms of challenging cash or legal tender, but who knows? That may happen. Now, your second question was, I've forgotten. You had something about financial stability, and then I had another point.
Actually, how the central banks manage.
Oh, yes. Yeah. Okay. Thank you. Okay, a CBDC is simply going to be another form of money. It's nothing new. So whether you have a cake which has 3 slices or you have a cake that has 4 slices, the size of the cake is still the same. So a CBDC will count as money. So just as at the moment, if you think about a central bank balance sheet, there's notes and coins, and then there is, you know, the reserves at the central bank, and whatever the settlement balance is. I mean, all of them are money that is issued. All of them are liabilities by the central bank, and thus for money. So a CBDC would be a 3rd or 4th form of money. So in that sense, it wouldn't change anything. It would simply be money that exists as zeros and ones. But it's nothing different from having a note or a coin. So in that sense, monetary policy doesn't really change.
May I ask something also?
Yeah, of course.
Okay, at the very first graph, you showed us the acceptability of the money. Yep. And I saw at the 2018, it was the lowest point. And in 1 year, it started increasing. Was it the Bitcoin prices affect this?
No, this is Libra. People woke up to the fact that, oh, we have to be more aware of what the private sector is doing. So this is in July, was it July of, or was it Libra in 2019 or was it 2020? So my explanation was, I may be wrong because it's the wrong year, but I would ascribe this to Facebook's Libra, where people said, okay, this is it was badly thought out. It didn't make any sense, but you know, someone like Facebook.
Hocam 2019, it was like.
So someone like Facebook with 2 billion customers, you know, 1/3 of the globe going, well, we'd like to do this. And using Libra will be as easy as sending a WhatsApp message. That's when central banks went, oh my God, we need to think about this more carefully. And we need to be ready. So we need to do more research, and we need to think about what this means for us, for our economies, and so on. And this goes back to a point Jenna made or kind of made in terms of the financial stability concerns of emerging markets. I mean, imagine if you are like me, I have money in a Malaysian bank account, and there's a crisis, there's a political crisis, and I can simply take all my money out of my bank and send it abroad on my mobile phone. You know, countries are worried about capital flight, and any of these private, I mean, be it a private digital currency or a CBDC, will make it much easier for you to send your money at the push of a button to wherever you want. At the moment, you know, it's very difficult for me if I want to send money home to Germany. If it's above a certain amount, you know, I have to go to the bank. They have to let the central bank know and all of this stuff. And I can only transfer so much per day. But you know, if I can do it, if it becomes as easy as a WhatsApp message, countries get worried.
May I ask something?
Yeah, of course.
I remember German finance ministry recognizing Bitcoin as a unit of account so that it can be used as trading and taxing purposes. But then we are talking about central bank going into that digital currency thing. Then how is it going to manage fiscal policy and monetary policy? One of them is accepting private currency as a unit of account kind of question.
Yeah, I don't know what happened to that. I don't know whether it was an actual, whether they actually allowed it or whether they were thinking about it, or so I don't know about the German case, but I mean, obviously, okay, I kind of, earlier today, I kind of decided I wouldn't talk about Bitcoin, but okay, let's talk about Bitcoin. Why not? I think, okay, Bitcoin is complete and utter nonsense. I hate it. And, you know, as economists, we should all hate it because it makes no bloody sense. It's pure speculation, nothing else. It serves no purpose. It has a value of zero, maybe even negative if you think about what it does to the environment. So, you know, it's a great invention, you know, well done, Satoshi, and, you know, thank you for working it out. But, you know, I mean, it's pure nonsense. I mean, it doesn't serve any purpose. I mean, it's not money because it's not a store of value. It's not a unit of account, and it's not a means of exchange. So, you know, I'm always very surprised or confused when I hear people saying, well, you know, you can pay in Bitcoin. I mean, we don't use it as a store of account. You know, I don't go shopping and go, ooh, my 4 apples are 0.00006 Bitcoin today. You know, I think, you know, I'm sure all of you work in Turkish lira. I work in ringgit. I mean, it's we don't use it as a store of as a unit of account. You know, it's not a great store of value because it's so volatile. And you know, it's not a means of exchange either for the same reason. So I would be very shocked if any government would accept it as for sort of tax purposes. And I will follow up on that German thing. I remember it vaguely. If I find out more about it, I will email Shenim and sort of tell her the update. But you know, how is that going to work? I mean, it'll be speculation again. You know, I may choose to pay my taxes. No, I mean that makes no sense. If, well, let me think. I mean, it's sort of speculation again, because am I hoping that the Bitcoins appreciate, so I have to pay less euros in my taxes or something? I mean, what's the point? Just pay your taxes. I mean, it's sort of complicated enough paying taxes. But I will write it down. Bitcoin for taxes. So I will get back to you on that.
May I ask a question?
Yeah, sure.
It's kind of simple one, but what is the difference between having normal currencies and CBDCs? If, for example, every government is going to establish one for itself, and is there a necessity for accepting those digital currencies from central banks, maybe?
Fantastic. One reason, so I think this is my third presentation to Bilkent students. One of the reasons I really like doing them is because you ask all the difficult questions. I have there are things I don't mention because I want to avoid these things, and then all of you point your finger at this, sort of going, no, you can't get away without mentioning this. Excellent question. So I've already forgotten the first one, but let me start with the second one, which is yes, there may be. I mean, obviously, in 20, 30 years, or maybe sooner, who knows, every country will have its own digital currency. Okay, what do we do then? I mean, this is sort of a repeat of what we have right now in terms of, everyone has his or her own currency. So there'll be some sort of exchange rate between the Euro CBDC and the Canadian CBDC. The one difference is, like we have right now, sort of nothing really changes. Some of them will be more respectable, more reputable than others, just at the moment, just like we have at the moment. Some currencies are being used more than others because they're more liquid. Stable government arrangements, and so on and so forth. We can imagine maybe a world where there's only one currency. I mean, that's also possible. One digital currency, that may be possible. But I mean, to me, nothing much changes. One issue is that there may be sort of a race to the bottom, and this very much depends on the design of the CBDC. So then, not all CBDCs will be the same, and this is sort of a good point to get to some of the sort of design features. And I will get back to your question, but let me sort of mention a few of the design features that we know we have to address, but we're not quite sure how or to what extent. So the first one is one I mentioned already, is who can hold the CBDC? Is it the general public, i.e. the retail CBDC, or are there restrictions on who can hold it, i.e. wholesale, i.e. the financial system only? How do we transfer a CBDC? So if I have a CBDC and I'm wiring Alp some money, how does that get to him? What's the infrastructure, as someone called it a minute ago? So how do we record the transfers and the holdings? Is that going to be on a blockchain, distributed ledger, in gigantic Excel spreadsheet? Does this happen at the central bank, or does it happen at our regular banks? And in terms of the transfer, is this what's known as a token-based, i.e. there is something, a little entity on my phone that is like a note or a coin, and I send 5 coins to Alp, and I transfer money to him? Or is it simply based on accounts where we all have an account, and my account gets debited and Alp's account gets credited? Is it actually by me transferring the CBDC, or is it done in the background in the infrastructure? There's a big question about transparency and privacy. So at the moment, if I'm giving money to Alp, it's anonymous. No one knows about it. Only Alp and I know that I've given him, that I've repaid him whatever it is. Now, this is a feature of cash. It's anonymous, which is why people walk around with big suitcases full of cash and deposit that in a bank, because no one knows about that. Now, what about a CBDC? Do we want that to be as anonymous as cash? I don't think we can, because this is, this is the safest form of money imaginable. Do we want to give money launderers, arms dealers, drug dealers, do we want to give them access to a CBDC in an anonymous manner? So there's a question of, how transparent should the CBDC be? On the other hand, if everything is recorded, every single transaction, every day, that's a lot of information that goes to the government. Can we trust the government not abusing whatever I buy on Amazon? The government will know about it because I pay for this with the CBDC, so they see if I buy a manual on how to buy an atomic bomb, they will know about it. So that's a big issue. The availability, is it 24 hours a day, 7 days a week, 365 days, or only during office hours or during business hours? How much can I convert per day, or how much can I convert? Now this goes to Senem's financial stability issue. In this sense, in terms of the sort of transfer mechanism, if I need to have an account in CBDCs to make this work, where is the account going to be? Well, there are two options. One is it's at the central bank, and the second one is the central bank, or it's at my commercial bank. And then the commercial bank does all the payments with the central bank. Now, both of them have advantages and disadvantages. The big disadvantage is having it at the central bank is, a central bank, it's called a bank, but it's not a bank as such. So you'll have to, what's the population of Turkey?
82 million.
Yeah. So is the Central Bank of the Republic of Turkey in a position to manage 82 million accounts? And if you have an account, what sort of account is it? Do you want a credit card? Do you want a checkbook? Do you want to be able to get a loan? So, can a central bank handle all of these banking transactions? So ideally, that would be nice, but and if that is the case, why would I ever open an account at a commercial bank. If I can put my money into the central bank, which is 100% safe, you know, I would be stupid to open to have an account with a commercial bank. So what's going to happen in a crisis? All the accounts that are in the commercial banking sector will migrate to the central bank. So this is, you know, the sort of financial stability concern in having a CBDC and accounts at the central bank, that, you know, there'll be big money flows in bad times from the commercial banking sector to the central bank. So in terms of the convertibility, there may be limits, that you don't take all of your money out of the commercial bank and move it into the central bank, and vice versa. And then finally,
May I
there's
add something?
Please.
For example, as central banks having like 83 million account, isn't SM kind of risky, as we know that central bank is the lender of last resort? We said that like that. Yeah, it's really risky for the central bank having such a huge accounts in itself.
Indeed. I mean, the central bank would be, by having accounts at the central bank, not only would it make the financial system more risky, it would also increase the chances that it would have to be the lender of last resort. So there are lots of downsides to having an account at the central bank. So sort of the consensus at the moment is that there should be another layer around the central bank, which is the regular banking system. So they will run the accounts, they will do all the payments and sort of everything else.
May I ask something like
Yeah.
that? What if those optional design features create a variety of digital currencies? Like probably in the Eastern countries, the holders of the currencies will be, the digital currencies will be the government, and at the Western countries will probably hold by maybe individuals, companies or something. What will happen? How their relationship would connect?
Yeah.
Those
I mean,
options.
this is sort of another design option, which in fact I should have put down, but I didn't. You know, if I'm in Malaysia, will I have access to a digital euro? Will the ECB be prepared to have me to let me have a euro CBDC on my smartphone or in my account with my Malaysian-based bank? So that's, you know, I mean, how happy will countries be, especially emerging markets, to have other countries hold their currency? You know, they're pretty uncomfortable with, you know, others holding your shares and your bonds. Now, how happy will they be with other holding your legal tender, your currency as well? So this is, I'm going back to your first question, which is, you know, what if every country has one? Well, the first question is, can you get your hands on the other countries' CBDC? And what if, and you know, there may be differences in the design features. It may be that the euro will have full transparency, i.e. the ECB will know everything, every transaction, and there may be another CBDC that is anonymous. So there'll be competition between these currencies, and, you know, a bit like you say, depending on your preferences, drug dealers will use the CBDC of the country that has full anonymity of the account. Or if you are, let's take a nicer example. If you are an importer or an exporter, you may want to have access to the CBDC 24/7. So you may want to choose a CBDC that offers you that. So there'll be a bigger choice of currencies for you to use in your transactions, perhaps. Is that a good thing? Is that a bad thing? We just don't know. But what I'm afraid of is, a sort of a race to the bottom. You pick the weakest CBDC for particular transactions, rather than have, sort of the all singing, all dancing CBDC that is safe and secure and transparent and all of this stuff. It's a bit like, is there going to be a situation and what's it called? Gresham's law. Bad money drives out good money. If you think back about history, silver coins or, copper coins drove out gold coins. Is there a case that, a bad CBDC will take the place of better CBDCs? And I don't think anyone has sort of thought about that, but this may happen. Again, I don't know whether I've answered your question or not, but
it leads to one last question, by the way. Sorry for interrupting.
No, God, please, no. I'm really enjoying this. I mean, I hope you're enjoying this, but I'm really enjoying this.
Assuming that both of the normal and digital currencies are there, what if the non-countries like Turkey? What if the digital currency of Turkey becomes more valuable than the normal currency of Turkey, according to your sayings, like its transparency or availability?
Yeah.
What will happen?
Okay, sorry, this is another thing which I should have mentioned but didn't mention. There's another, under convertibility, there's another issue that is exactly that. What is the relative value of the CBDC versus the normal notes and coins? And it will have to be one-to-one. It really can't, well, the most logical thing is that one unit of the CBDC is equal to 1 Turkish lira, 1 euro, 1 US dollar, whatever, what have you. I mean, this is beyond our talk today. I have a bit of a thought experiment. It doesn't have to be like that. In fact, you can have a daily exchange rate between the CBDC and your fiat currency. Now, it gets very complicated very quickly. It becomes another tool of monetary policy. So this addresses Senem's question. Again, someone has kind of worked it out. If you want the information, I can send it to you, but it doesn't have to. Sorry, the most logical thing is a one-to-one exchange rate, but it doesn't have to be. If it isn't, it becomes very complicated, but it is possible.
May I add something? If it is equal, for example, 1 Turkish lira is equal to $1. So what's the point of making economic policies?
No, sorry. I meant what I talked about is 1 Turkish lira is the same as 1 e-lira or whatever you want, or bit lira. I mean, whatever you want, whatever the name of the Turkish CBDC.
CBDC.
Yeah.
Okay.
Yeah. No, across borders, you can have different exchange rates. Now, depending on what, again, the most logical thing would be that the the Turkish CBDC has the same exchange rate against the dollar than the physical Turkish lira.
But in this case, as a Turkey, sorry about that. Actually, we have kind of good online banking. You know, I can send money to my brother or my mother in a second. So what's the point? Why would I choose the CBDC?
Fantastic point. I mean, this is why, I don't think that we need one. At this point in time, there are, private sector solutions to this. And at the moment, these known unknowns far outweigh any benefits that I can see at the moment. So to me, right now, and possibly for the foreseeable future, I don't see any need for a CBDC. I mean, the other thing which I kind of talk about a little bit, but in my design thing, assume a country actually does a CBDC. This is going to be the most hacked website in the world. I mean, everyone will try to hack into that CBDC. So I have no idea how we can ensure the safety of an electronic currency. When we have problems earlier or at the end of last year, the US Treasury Department was hacked. The US State Department was hacked. If we have a CBDC, I think the North Koreans are only waiting for their cyber attack on any CBDC. So, so in terms of Yildiz, your question, at the moment, as you said, there are no benefits to having a CBDC. It's still fun to think about it. It's very wise of central banks to think about it, because we cannot be surprised by another Libra. So we have to be ready, even if we don't want it. And I don't think central banks want it, to be honest, because for all of these very tough questions, and you're not going to make everyone happy. I mean, depending on the different design features, there will always be some people who will complain and who don't like it, and it's too complicated, and why. And it's probably also only going to work if we abolish cash altogether.
Ole, I have to interrupt in here. We have to actually end up in session right now. I'm sorry. 3 minutes left, and next class is about to start. Actually, it was a really great session, and the professors in here. Thank you for everybody who joined us today. If you have any questions, you can send me, or I think you can send Ole as well. Thanks for joining us today. It was a really great speech. Thank you for all they being here. Thank you, Ole, so much.
Thanks.
No, thank you for having me, and fantastic questions. Thank you so much.
Thank you, Hocam.
Thank you. See you.
Have a nice day. And Hocams, we are sorry that we are interrupted your class. We are immediately leaving the session.